Hello friends, this side Rahul Magan here is the Chief Executive Officer of Treasury Consulting PT Limited, which is a Singaporean multinational group. And today we would be covering a very dedicated topic which is on credit spread sensitivity in banking books, basket swap. But before telling this, I am very pleased to share that this is the 498 video on our YouTube channel. And we are just 2 away from the 500 benchmark, which is a benchmark on YouTube. So sitting today, we do have only Khan Academy, which is pretty big from our size and holding more than 6,600 videos, except Khan Treasury Consulting channel Foreign Exchange Maverick Thinkers is the only channel on the YouTube who have more than 500 technical videos. And sitting today, we are covering a very technical topic, which is credit spread sensitivity in banking books, basket swaps. I hope you've been to our earlier video about that topic. In this, we discussed about why CSSBB is very relevant for all the banks and why this is turning out to be a regulatory issue. Yes, I appreciate that in the last week JP Morgan Chase was involved, not involved, JP Morgan Chase name was there when the credit spread rising on a very fast note, and even regulators was not happy with that. But this is not a very easy topic and bank has to work pretty hard. The most important issue with that topic is that first it is computer denominated. Don't want to say that the computer denominated. Now every bank would have its own model. When we are taking an example of a bank who practically needs no introduction with the which is Goldman Sachs, they have their own prop trading models, and these prop trading models will tell them that boss, this is how you should go. Now after 2008, again and again we have saw that these prop trading models are not pretty effective in nature, and majority of the times we felt that these prop trading models are to an extent of failure also, because in 2008 when the securitization when securitization fell down, the entire financial market fell down, and in fact till now nobody showed that what is the quantum of the loss. Nobody knows. Different bank, even after 10 years of that, different banks are giving the different reports. So the biggest problem which CSSBB and also with his counterpart, which is IRRBB, interest rate risk in the banking book, is that it is not linked with each. It is completely computer denominated, and that is bank to bank. Because there are banks who are dependent upon Murex, there are banks who are dependent upon Calypso, there are banks who have their own systems like JP Morgan, so-called Goldman Sachs, Credit Suisse, they have their own system. They are bank house using mix of that. So this is little bit computer denominated. And at the end, before starting this video, we need to appreciate one fact that after all, it's a human being who is running the computer. Computer never runs themselves. It's a human being which is running a computer. And it's not a human being, in fact, it is a model which is running in the computer. So if the input parameter is not correct, everything will wind up. And 2008 till 2018, the world has saw several examples. Now before initiating this video, I would like to tell you a small story which is practically linked with that. Suppose you are with your family and you are entering into a mall, whereby your wife and 2 kids are entering into the mall, and you wanted to buy vegetables, fruits, sweets, the toys for the kids and multiple things. And assuming that the shops are on the different floor, assuming that the mall is of 10 floor, and you have to go step by step. So you have to go to first floor, then second floor, then third floor, and slowly you have to go. Now what would happen is that maybe in the first on the very first floor you would be able to handle all the shopkeepers, and they will, with each product they will give you a poly bag. So you went by the 6 shops, you bought different things from different shops, and they give you poly bag. You took 3 poly bag here, 3 poly bag on the second hand. Once you enter the second the second floor of the mall, it's turning difficult. Third, as soon as you are going up, it is turning difficult because you have a lot of poly bags. Now you must be thinking that we have a lot of trolleys which are in the mall. You can use the trolley and you can put your material. But if you compare the trolley of an airport with the mall, you will get to know that the mall trolleys are not much spacious compared to the airport. Of course, different airports might not have that. I'm talking about Singaporean airports and others. So trolley is to an extent convenient than taking it in the hands. Now what you do, what a bank do? Bank doing the same. Bank is not taking each poly bag either in the left or the right hand. Bank is taking a big trolley. But the difference between bank and an individual in the mall is that the place of what to put on the top and what to put at the bottom and what to put at the mid, this has to be decided by the bank. This is the key thing. Unfortunately, the same has been decided by the models which are in the computers. Model is nothing but an algorithm which has been created by an individual as per his or her capability. Bank continue to claim that they keep updating that, but we saw in 2008 that how much update is happening. Now here we are taking an example of a bank, Goldman Sachs, but taking 6 desks. Goldman Sachs US, Goldman Sachs Europe, Goldman Sachs Latin America, Goldman Sachs Australia, Goldman Sachs India, Goldman Sachs Singapore. Now these 6 banks which we are taking into consideration, these 6 they are the different desks of the Goldman Sachs. Now Goldman Sachs US, all 6 are dealing with these 4, actually 5, but I do not want to discuss that now because this is on the consulting note. Non-maturity liability and non-maturity asset, which is in nomenclature wise known as non-maturity asset, non-maturity liability, and which is practically known as non-maturity immunization, which is non-maturity asset minus non-maturity liability. This is a pretty technical topic. Hopefully if we get some time we will make the video on that. But if we take this apart, there are 4 kind of things which they are doing. What is interbank, corporate sales desk, intrabank and non-deliverable desk. Now all banks are having these 4 in place. Now let's take an example. Sitting today, Goldman Sachs dealt with 4 corporate clients. Just the name which everybody know. They dealt with Microsoft, they dealt with Google, they dealt with Yahoo, and they dealt with Tesla. Everybody know the name of all the 4 entities. Now what do you think? Is Goldman Sachs is going to be taking the independent positions of that? Assuming US dealt with Microsoft, Latin dealt with Google, Australia dealt with Tesla, and Singapore dealt with Yahoo. The list might be long. What do you think? Goldman Sachs would be Goldman Sachs would be taking independent CDS positions? They would be mad. I'm seriously telling you, Goldman Sachs would be mad. Because at the time we are speaking on 14th of May, even on a per second basis, Goldman Sachs is executing a deal. We are talking about the number 1 bank of the globe. Now Goldman Sachs would literally be mad if they are going to do on an individual CDS note. Now they would need somebody who will give them a collective, and assuming here we are taking an example of a bank who again needs no introduction, which is DBS Singapore, Development Bank of Singapore, and their CASA ratio is more than 90%. Now Goldman Sachs will transact with DBS. Of course, Goldman Sachs would have multiple counterparties. They won't be rely on a one counterparty. The reason being, with due respect, what would if the DBS defaults? Then Goldman Sachs is gone. Unfortunately, when it comes to CDS, in the books, in the seminars, in the lectures, people talking about what would happen when there is a credit default event. I am again asking what would happen if the counterparty defaults. People are saying what would happen if the Microsoft defaults, Google default, Tesla default, Yahoo default, or maybe all of them default. I am always asking, forget their default, to tell me what would if DBS defaults. Then what would happen to Goldman Sachs? So Goldman Sachs would have number of counterparties in place. Of course, as a human being, we need to appreciate one thing very carefully, that we might take n number of counterparties, but everything is subjective. So you cannot stop everything. You know, there is a very good 2 kind of risk. One is systematic and one is unsystematic risk. Systematic risk can be mitigated via bifurcation, but unsystematic risk cannot be mitigated via bifurcation. So this is the kind of systematic risk which Goldman Sachs will bifurcate it from via doing bifurcation. Now, all these deals and 4 counterparties, so Goldman Sachs left with these following option. I have used the word trolley for a mall, but we don't use the word trolley for credit derivatives. We use the word called basket swaps. There are multiple kind of basket swaps and there are multiple kind of references index which are linked with the basket swap. If I start noting each reference index, I would be mad and you would also. Because there are thousands, there are numerous references index which banks are using to link with each of them. Again, when you read books, the misconception is that it is being linked. What would if Microsoft would default? Boss, I agree. Microsoft defaulted. Goldman Sachs is at the loggerhead. They are going to pay to the Goldman Sachs. What DBS would be paying? The difference between the hedge amount minus what is the value of Microsoft. Example, what is the value of the Microsoft in the books of Goldman Sachs? This is what DBS would pay. Now my question is that how you will get this value? Sitting today, if any, in fact, if take an example of Facebook, when they went ahead with this Cambridge kind of scandal whereby they sold the data of the people to the Cambridge and Atlantica. Now the value of the Facebook reduced by more than $80 billion. This is the market, this is the reduction in the market cap. And if you go to the different news, different internet channels, you will get to know somebody will say 90, somebody will say 100, somebody will say 80. There is no common thesis that where. And nobody was even that sure that what would be the future of Facebook in that. And that is why one of the important thing which we need to learn that at the time of the default, the value has to be decided by the reference index. And that reference index is not subjective. So I am no authority to say that Goldman Sachs will decide that or DBS Singapore will decide that. Any of them can decide that. So it might be Goldman Sachs which will decide. It might be DBS Singapore which will might decide. It would be a win-win situation as well. Now what would happen? They would now I'm noting the few very important swaps. One is FTD, first till default, second till default, nth till default, nth till M default, and all till default. My favorite is this, ADD, all till default. Let me make a small note here, small diagram. Let me make this. And assuming Goldman Sachs have 7 positions which they kept. 1, 2, 3, 4, 5, 6, 7. First till default means by the time this will not default, the rest of them might default it. Goldman Sachs is not, the DBS Singapore is not bothered. Because DBS Singapore will say, boss, FTD means this has to be default. They all might default it from 2 to 7. I'm not bothered. This has to be default. That is why I told you that the placing of a relevant item either at the top or the middle or at the bottom, that is again a challenge of the life. And that nowadays is being decided by the computer. I'm not doubting on the power of computer, but we understand, right? Another is STD, second till default. Here DBS Singapore will say, boss, this has to default. Others will default or not, that is not a problem. But in all the cases, what it would happen is that, except the last, what would happen if anything would default? Goldman Sachs will stop making the payment to DBS Singapore, which is a CDS payment, and DBS Singapore will stop receiving the payment. The CDS contract will wind up and DBS will pay the difference of the hedge amount minus the recovery value to Goldman Sachs, and that is based upon an index. Now what would happen in case of nth till default? Here Goldman Sachs have to refer the value of n. It could be first, it could be second, it could be fifth, or it could be 7 for the sake of simplicity. Nth till m. This is very important swap and only big banks are taking. Here Goldman Sachs will say third till sixth, which is nth till m. Third till sixth. Boss, if any default would happen including third and including sixth, then the contract would wind up. And I'll stop making payment to you, you will stop receiving the payment, and you will pay me the difference between the hedge value and the recovery value. On the contrary, if first 10 2 and 7th will default, forget. This is not DBS problem, this is Goldman Sachs problem. That is why placement is a very important issue. The big banks like Goldman Sachs, who have big power, big money, deep pockets, they go with ATD, all till default swaps. Boss, if any one of them would default it, you are supposed to pay. Simple. The difference between one of the beautiful features of the all till default swap is that, very important feature, suppose the first default, the CDS contract will not wind up, it will continue. In all other cases, either here, CDS contract will wind up, but here it will continue. If the first would default it, we will take the first slide away, from the rest 6 it will continue. When the second will default it, we will take the second slide away, the rest will continue, and this is how. But again, ATD swaps premium is pretty high, and not all the banks can afford that. So if you talk from an Indian bank perspective, can Indian bank hold ATD swaps? First of all, we do not have the market for that. Secondly, they will never get a CDS seller. They would always be CDS buyer. Third, the premium would be too high, they're not been able to afford that. To cut the long story short, CSSBB is a very good regulatory initiative. I practically agree that his counterpart also, IRRBB, which is interest rate risk in the banking book and the credit spread sensitivity in banking book, is a very good initiative. It's a good initiative for US, Europe and countries like Singapore, where the market is pretty deep. Like you talk about CDS, you will get whatever instrument which I name, these are few. The board is small, I could have listed so many. So market is deep here. But if you talk about the countries like India, Indonesia, Dubai, Hong Kong, Bahrain and all, the market is not pretty deep. The instruments, the initiatives like CSSBB, first of all, these are not in India. Talk about Dubai. CSSBB and IRRBB is pretty difficult. So you have to come to the non-deliverable center, which is US, Europe or Singapore, to get that pricing. And you very well understand that if a Singaporean company will take the pricing in Singapore, on the contrary, if a Dubai company will come from leaving Dubai, come to Singapore, the pricing would differ. And few bips matters. It do matter. So I'm not saying the reporting is bad, the initiative is correct, the reporting is good, Basel 3 did a wonderful job, Pillar 3, Pillar 2, ICAP did a wonderful job. But at the same time, we need to make sure that the market has to be there. Regulator duty do not end by just making a law and forget. Regulator duty is to make sure that this would end, this would go till the last. This is how it will go. It's a very good initiative and we will continue to deploy a lot of videos about that. This is Treasury Consulting. In case you have any doubt, you're most welcome. Our Skype ID is Rahul5327. Platform is www.fixedincome.global. Website www.treasuryconsulting.in. Mobile number is 9899242978. Email is rahul.magan@treasuryconsulting.in. This is 498 videos, 2 away from 500. Treasury Consulting will assure you that we have a lot to offer you, and in the next 90 days, anyways, we would shoot at least 100 videos. Have a wonderful time and you're most welcome. Thank you.